All right, guys, back to work. Back to work. No, we're not done yet. We're just getting warmed up this week. We got one more big day coming tomorrow. Boy, markets made a big move off that big news event that came out this morning. And I'll tell you right now, I love big moves because whenever I see a big move today, that usually means big opportunities to make big profits the following day. I have two specific types of trades on my radar for tomorrow, and I'm going to cover all my favorite entries, my exits. I'm going to give you guys an easy game plan to make some money as well to finish up the week on Friday morning. Before we dive in though to my favorite trades for OpEx Friday, finally Friday tomorrow, make sure you subscribe to our channel. You don't want to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button, will you? And give me a shout out, give me a hell yeah down in the comment section below. Thank you so much for tuning in, supporting our channel. Enough of the intro though, Joe. Let's go make some more money on finally Friday trading session. Now, charts are all prepped up. As you can see, Nasdaq triple Qs are all ready. Oh, the E-mini and the SPY is ready. I have four very important clues on these charts right now that are telling us where I think the winning trades are waiting for tomorrow. One of those important clues is right here on these 60-minute hourly time frames. You can easily see we are bullish overall on the S&P SPY, bullish overall on the Nasdaq and the triple Qs, and very interesting, here's that gap. It's right above us now, 02.25 on the S&P SPY and the 46.25 on the Nasdaq, the triple Qs here. That goes back to mid-late July before that market bottom fell out a few weeks ago. We're bullish overall, and it's pretty obvious now. These buyers have one thing on their mind: to fill that gap. Will it be tomorrow? Maybe early next week. That's one very, very important clue. But you know what? I have three, I think, even more important clues, because, you know, the 60-minute time frames are great for direction. They're good for bigger picture, but they're not going to help us time the best entries. And the entries are where we make our money in these markets, right? So three more important clues on some faster time frames. Before we dive into those three more important clues and talk entries, let's talk schedule for tomorrow, because tomorrow is a Friday and I have three things on my radar for tomorrow. First things first is the news we have tomorrow. We get housing starts at 8:30 Eastern time. But you know, in all reality, I always pay attention to that consumer sentiment number at 10 o'clock Eastern time on a Friday. I know it's not a big red star news event, but in my experience, that Michigan Consumer Sentiment Survey has a knack for moving these markets. So definitely keep your eyes on that 10 o'clock. We call it the 10 o'clock shock in our trade room. The second thing to be aware of is there'll be no video newsletters next week here on this YouTube channel. I will keep sending out my short videos and posting on Twitter, of course, consistently throughout the day, but no video newsletters, no long form videos. Next week, we'll come back the 26th of August, basically in 2 Mondays. I'm working on some very exciting new updates to our video classes for all the students here, the members here at School of Trade. So be aware of that. I'll miss you guys next week. That's all right. And the third thing is, tomorrow's a Friday. Now, Fridays are not like any other day of the week. I have what's called the Friday mindset. The reason I say this is because on Fridays, we are not usually our most disciplined, right? We get lazy with our discipline on a Friday afternoon, and the markets get really illiquid on a Friday afternoon. So my mindset on a Friday morning is to get in early when the getting's good, when I'm at my best, and the liquidity is still pretty good. I'm going to take some profit quickly, get some green on the screen, as we say, get rid of risk. Don't let those winners come back and turn to losers against you. And I'll tell you, if there's one thing you need to learn about Friday afternoons, when the markets get illiquid and traders take bigger risks, leave a runner. Leave a runner. One little contract runner on a Friday afternoon can make your entire week. So Friday mindset. Get in early when I'm at my best and the markets are liquid. Take that profit quickly. Get some green in the account on Friday. It always feels good to finish up the week with some profit going into the weekend. So three things for tomorrow. News, keep it at 10 o'clock Eastern time. No video newsletters next week. I know I'll miss you. And again, Friday mindset, early in, take profit quickly, get rid of risk quickly, and leave that runner. Now back to our charts though, because the money is made on the charts, right? I mentioned earlier, we know the markets are bullish right now. You didn't come here tonight to talk about the market being bullish right now. Let's talk about the best entries for tomorrow. The 60-minute time frame is not going to give us the entry tactics that we need. We need some tick charts for that. Tick charts make everything easier for entries. All the time frames, of course, in the upper left-hand corner. And this, my friends, is the 21 EMA, in case you're tuning in right now for the first time. I see 3 more important clues on these tick charts right now. One important clue is that range right there. We had that big breakout. The retail sales, the Philly Fed came out this morning, market blasted higher, spent some time in a range, and now get a range breakout. Now, one thing we love about ranges is when they break out, they love to pull back and bounce off those previous trading ranges. Breakout pullbacks are very common after a range breakout. That's one important clue on this chart. The second big clue here is the size of this move. We just keep on going up and up and up right now. Anytime we see a big move in one direction like this, we always know I want to buy as low as I possibly can. I want to buy as low as I can. That will be a big theme of the video tonight. And the final thing is you'll notice we get this channel coming in. I call these pop and grind channels. They kind of pop up and they start grinding, going higher here. I mentioned this because if we keep going higher into tomorrow morning, we keep on grinding higher, I'm going to be leaning on this pop and grind channel to buy as low as I can. We may not get that breakout pullback, right? Just be aware. If this thing keeps on grinding up to that gap we saw on the 60-minute time frame, this pop and grind channel becomes a great tool for us to time the bottoms on these pullbacks. So, for example, I would love to get a pullback again down into that breakout pullback zone. Now, remember, we have this big move higher right now. I don't know how far that pullback will go. It may go really deep. We talked about the rug pull strategy in last night's video, right? Which we clearly did not get today, maybe tomorrow though. So I'm not gonna pick a bottom on this when it pulls back into that prior trading range. What I'd rather do is use one simple entry pattern. I call them failure patterns, and you guys learn these in our free video classes, right? I'm not gonna pick a bottom on this. I don't know how far it will go. What I do know though is once it pulls back to that moving average, this is a horrible place to be selling, right? Not an overall bull market. So if I can get bears coming in and trying once, trying twice. Now why twice? Because now I get trapped. Now I know where your stops are. And now if you're caught short on that pullback, I can now buy right into your stops and run higher. Now watch closely. The next step is as we go higher, very important. If you want to make more money in trading, add to your winners. Add to your winners. My favorite way to add to a winning trade is to look for a bear trap combination. Now, this is very simple. If we start going higher here, we're going to want to go back up and take out that high, right? As we go higher, look for a higher high in price with a really shallow pullback right there. It will barely pull back to the moving average. This one right there, right? Look, it runs up, shallow pullback, higher high in price. We call those traps, baby, right? That's a bear trap and a great way over here now to add on to your position, right? So again, it's a failure pattern first, then go in and either add more to it or simply jump back in a failure into a bear trap combination. Target's coming off, of course, at the top of that move. And remember, leave a runner because tomorrow is a Friday. Now, one kind of variation of this I want you to be aware of. Sometimes we get a really deep pullback. It pops up really fast like this. It gets above the moving average, and the 1 try, 2 try happens like this. Okay, you don't want to buy the 2 try like this because now your risk is here, your reward is right back there. That's no bueno. What I do is I want to get underneath that low now. So if it bounces hard off that low, you want to think about now using that trap pattern to get in. Does that make sense, right? So again, if I get a deep pullback, bears once, bears twice, I can get a good risk reward ratio on this risk reward. That's good. But again, if we drop and then bounce quickly back up, 1, 2, now I go looking for a bear trap entry because that will get my risk reward ratio back in line, risk reward. Always want to buy low if it bounces, right? So just be aware of where you are on the entry and be a simple bear trap entry instead of a failure entry. And one last variation on this, if we're lucky tomorrow, we'll get that big rug pull. We may not get it with that gap up there in the 60-minute time frame, but if this thing was to really bloodbath, right, and then kind of boing right back up again, remember these V bottoms, they're a bit challenging on the emotions because it's tough to stay patient for it. One technique I love to use in our trade room is if we don't get the entry on that pullback we want, if it kind of runs lower and then whoop right back up again, remember, don't chase after. I don't want to buy as we go higher. You want to buy as you're going lower. Easy way to do this is mark a trend line off the highs, like I'm doing over here, right? Mark a trend line off the highs, bring it down off that low. See what I'm doing here? Now look left. Find some prior swings, one of these prior swings. And in my experience, these are usually pretty easy winning trades. Getting that first test, right? It's the first touch of that channel, and it could be a bear trap. Like I'm showing you right here. A lot of times we'll get underneath the 21 EMA. That's where failure patterns hang out, right? Bears get short. Those poor bears getting short. Below 21 EMA, not in this market right now. A failure into pullback combination. And remember, the market wants to go right back up and take out that high. So 3 variations there for you on that kind of breakout pullback I mentioned here earlier on in the video. Let's slow down for a second though, because at this point, we've got a lot of different topics so far. I know most of you guys and gals watching right now, you know these patterns already. You're making money with failures, trap combinations. You know what we love, these V-bottom channels and first tests here. But if you're watching for the first time right now, this might be a brand new language, a brand new strategy for you tonight. But don't you worry, I teach this entire roadmap. I have hundreds of examples of failures, traps, these V-bottom first test pullbacks. I cover this in so much more detail in our free video classes. I'll put a link up top here for you. Don't you worry, upper right-hand corner, grab that link that popped up there and take that free video course, because the strategy I teach in that short video series will teach you a stupidly simple trick we use in our members trade room so we always know where the best winning trades are going to be each day. More importantly though, we make our money by timing better entries. I'll teach you 4 my favorite entry patterns, failures, pullback combinations, lots of trap combinations. Guys, the markets are way too good right now not to be making consistent money. If you're still missing the best trades each day, if you're serious about making money in these great markets, grab that link that popped up there, take that free course, learn the entire roadmap, get your confidence back in your trading. And again, it'll teach you everything in that free video course. Also be aware too, I'm gonna put all the important links tonight, the description of the YouTube video, put the free class links down there, of course. Start first with the free video course. Also too, we trade together every morning in our trade room, 8 o'clock Eastern time. I'll put all those information links, description there as well. And don't forget, I post a lot of updates on Twitter or X throughout the day, videos, charts, mindset stuff. If you're on Twitter, X, give me a follow. Again, all the important details, all the links you'll need are all included in the description of the YouTube video. And that will give you a way to learn more about all the entry patterns we're talking about here tonight on this video. So now we've covered a couple of variations of this. One more variation we'll talk about here is oftentimes we'll get that pullback. Oftentimes we'll get our failure pattern, right? Our 1, our 2, we'll trap the bears in, we'll run up. But for whatever reason, what happens is the underbelly of these moves oftentimes hold as resistance and we run back down again. This is a winning trade, of course, right? We're taking a 1-to-1 first target. I always go out and grab a quick first target, get rid of risk, right? Move stop to point of entry. This will make a lot more sense, of course. I cover this in more detail in our free video classes. But sometimes though, we get the first 1-to-1 target, we get rid of risk, and it comes in, right? Holds one of these prior lows and runs back down to retest that low. This is not a reversal, all right? It has to go a lot further than that to be a bearish reversal in a market that we're seeing right now. This is usually a gift or a second bite at the apple, because think about this. Anybody who sells up here, they become buyers down here. Anybody who sells up there, their profit targets are down here. Once the rookies chase this thing lower, right? Once the people who don't know any better yet, once they chase this thing lower, I can do the same exact thing, right? Trap those bears in, 2 tries, give me their stops to fuel that move going back up again. That's that failure pattern. And remember, look for that separation off the moving average, that higher high in price, and of course that bear trap combination right in there. Again, good example, this pattern right there. Lot of examples. Once you learn this entry pattern, you will love this setup. I like to use it as a failure in a trap combination, and again, leave that runner back up to retest that high. So now you know a bunch of variations of this pattern because, I have no crystal ball for tomorrow. I just know that on that pullback, I know what the most consistent ways to make money in these things, trapping in those bears, squeezing stops. Now, I've got one more scenario for tomorrow because you'll notice that there's a range brewing here right now. Now, ranges are really, really important clues. Let's go to the Nasdaq here. Now, the Nasdaq's getting lonely over here, I can tell. Nasdaq is bullish overall on the 60. Let's go to the tick chart, though, on the NQ. You'll notice this beautiful range brewing right now. Same thing's happening here on the S&P. And you'll notice on the Nasdaq right now, you'll notice I measure the size. Remember we said this last night? Anytime there's a range breakout, the size of the breakout leg is always the measuring leg. This also happened to be a news spike. So measured moves, we talk a lot more about this in the free video course, obviously. But anytime we see a breakout leg, measure the size of the breakout leg, and that will tell you right where the market wants to go. If there's a news breakout, a news spike, that's also a very easy way to find a kind of a measured move or a level of resistance up overhead. So very obvious there. And same thing in the Nasdaq too. Notice how it popped up, and I'm drawing that trend line kind of off these grinding highs. These are a really cool technique to find good pullback areas. Take that trend line, mark it back down here. This would be a fantastic area for that same stuff we talked before, right? That same, deep pullback, one try, two try, that failure pattern, going back up to retest the high. And again, if it was to bounce hard, right? If it bounced hard off that low, then one try, two try, I don't want to buy up there, right? Because now my risk reward is out of whack. That's not going to work very well. Look for the bear trap entry. That will get your risk reward back in line. You can build a trading career off a trade like that, right? Everything else is a lot less reliable. And again, if the rug was to get pulled out and kind of boing back up again, keep an eye out for that same technique, right? If it grinds up, that same technique off the high, off the low. Remember, look left, find some prior swings, and whatever you do, don't miss that first test, right? Don't miss that first test. And again, if it pops, double bottoms, oftentimes those double bottoms, right? Those double bottoms, do it again. That gift to us buyers. Oftentimes those double bottoms are the most lucrative trade because everyone's trapped short and there's nothing to hold it back from squeezing back up to retest the high. So the same game plan here can be applied here to the Nasdaq. But now let's talk about one of my favorite types of markets is a range bound market. Tomorrow's OPEX Friday, so it wouldn't surprise me if this thing begins to go sideways here overnight. Most important thing is if we go into a trading range, there's two things you need to learn about ranges, and we'll go into a lot more detail of this, keep in mind, in the free video course, a lot more examples of ranges in the free video class. But the most important thing about ranges is that ranges act like magnets, and they love to rotate, right? So basically, the amount below, the amount above, there'll be these triangles, and the market want to rotate back and forth, right? Back and forth, using that range as the magnet. So if we're lucky enough to keep going into this range right now, the initial game plan is pretty straightforward. I want to get that run going lower again. And again, I don't know how far that pullback will go. I'm not that good at this stuff. I don't think anybody knows how far the pullback will go. What I do know though is that once it pulls back, this is the last place you want to sell. And so once I see bears coming in trying twice here, same thing, right? There's that failure pattern. As it pops back higher, here comes your bear trap add-on. Again, you want to make more money, start adding to your winning trades. And one of the best things about ranges, which is why I think that my favorite market to trade is the amount below the range, can now project up above the range. And this is a great example where leave a runner. If there's one thing you learn from me when you're in a range market like this, leave a runner. Sometimes just turn your brain off, put that final target at the side of that pendulum swing. If you have to, leave the office, but don't get out too early because this thing will want to rotate all the way up. What I always do is take a small piece off at the top of that trading range, find that pendulum swing, and leave that final target. Again, Fridays love to run, right? So think about that sequence. It's very similar, right? It's a failure pattern into a bear trap pattern. But again, it's all about letting that sucker run, right, as it wants to rotate back and forth. Now, where things get fun is, here's where things get fun. Let's kick this up one more notch, a bit more advanced, but I think you can handle it, right? So ranges, they like to rotate. After a big move up like this, we oftentimes see the market try to pop up higher, but there's no more buyers up here because we've been going up and up and up for like the last 10 straight days, right? So hopefully we'll get one of these situations where we'll get some bull traps up here. Now, bull traps are very simple. It's buyers trying once, lower low, buyers trying twice. It's a lower low in price and a trap right above that high. You might hear me call these crown reversal patterns in our trade room. Remember, this is a counter trend trade, strong red candle, close below moving average. For me personally, this is a half size position, right? A quarter size position. If you're not making money consistently going with the overall trend, the 60-minute time frame, this might be better off being a zero size position because these are not going to be as consistently profitable as the ones underneath a bullish range. What I want you guys to be aware of though is if we get that fake out breakout off the highs, mark off the amount above, bring it down off that low, this becomes your target. But more importantly though, this is where bear traps live. These are fantastic opportunities for a huge profit because what happens is when this thing rolls off that high, it's going to feel very bearish. When I was a rookie, I would have said, oh, look, it's reversing. It's a bear market. It's probably not a bear market. All right. It's just a pullback in an overall bull market. But to most new traders, this will feel very, very bearish. Again, probably not a bear reversal. Once we take out that pendulum swing, remember, if we're lucky, it'll keep going a bit further, right? If we're lucky, it'll keep going a bit further there because the deeper it goes, the more it winds up and that rubber band pulls back. Now, we don't know how far the pullback will be. We do know though is this is a horrible place to be a seller, but luckily there are new rookie traders that come into the markets every single day with a brand new funded trade account, right for the pickings, one try, two try, squeeze those stops and run back up. And you know how this works now. You know this in your sleep by now, right? It's always going to be that higher high in price. It's always going to be that bear trap combination. And my goodness, leave a runner because you know where it wants to go, right? It wants to punch its ticket back up at that high. So again, these pendulum swings we call these rotations off the high after a big move like this could be the biggest winning trade of the month for some folks if we can get lucky and get that tomorrow morning. Right, guys? Well, I'm getting goosebumps just talking about this stuff right now. I'm getting some good PTSD off that right now. Anyways, all kidding aside, that's the game plan for tomorrow. Now, don't forget tomorrow morning, every morning, 8 o'clock Eastern time. The markets are wild, I know, but I'll tell you, it's so much easier to get your confidence back, start making consistent money each day when you learn and trade along every morning with us in our morning trade room, 8 o'clock Eastern time. I'm going to put all the important links in the description of the YouTube video. Again, grab the free class links first, learn the roadmap, get the fundamentals down. Hope you use this knowledge to make a ton of money tomorrow. I will miss you guys and gals next week here, but that's all right though. Back in the 26th, enjoy the free video course. In the meantime, be well, be nice to each other out there. Have a great week next week. And as always, be here next time. Adios, amigos. Bye for now.